Option buying may feel thrilling, but option selling is what actually builds lasting wealth through consistent, disciplined trading. Option selling doesn't rely on guessing market direction. It's built on probability, discipline, and following a proven system. Now let me introduce you to the Money Mastery Option Selling System, your complete framework for generating reliable income. Welcome to Money Mastery, where you'll get a step-by-step guide to financial freedom and wealth creation through systematic trading. This complete option selling system gives you professional methods and a clear step-by-step approach to generate consistent income. The system eliminates guesswork and emotional decisions. You simply follow the rules and let probability work in your favor. Let's explore a systematic approach to option selling that prioritizes probability and discipline over speculation. This system rests on 3 pillars: probability-based decisions, rule-driven execution, and clearly defined risk parameters. The option selling system thrives in sideways markets, where consistency and discipline turn time decay into steady profits. Here's the choice: chase excitement through buying options, or build consistency by selling them. Success starts with 2 non-negotiables: proper capital allocation and the right psychological approach. Capital rules branch into 3 essentials: use only risk capital, maintain minimum comfortable amounts, and never borrow money. Small gains accumulate into consistency, and consistency builds long-term system success. Option selling rewards patience but punishes ego-driven decisions every time. Not all markets are equal. Let's identify where this system works best. Trade only these 3 liquid indexes: Nifty, Bank Nifty, and Fin Nifty. Index options offer far superior liquidity compared to stock options, giving you the insurance policy of easy exits. Timing matters. Knowing when to enter trades maximizes the power of time decay. Once initial volatility settles after the first 30 to 45 minutes, entry timing improves, risk drops, and trade success increases. Avoid 3 danger zones: the first 15 minutes, major news events, and the final 15 minutes of trading. The most important rule centers on implied volatility. It determines when selling options becomes profitable. High implied volatility equals expensive insurance, and that's exactly when you want to be the seller. Low IV offers smaller premiums and worse risk-reward ratios than high IV environments. 3 core strategies form the tactical foundation, each suited for different conditions and skill levels. The strangle strategy delivers higher probability, lower stress, and serves as your core income generator in sideways markets. The iron condor contains risk within defined boundaries, making it perfect for beginners learning discipline. The iron fly connects directly to advanced traders, demanding expertise for its tight range and higher pressure. Start with wide strikes to earn confidence, then gradually move toward more aggressive positions. Strike selection directly impacts your probability of success and risk exposure. Choose strikes with high open interest, outside the expected range and delta around 0.15 to 0.25. Risk management rules protect your account through disciplined loss limits and controlled trade frequency. The stop-loss rule branches into 3 exits: predefined max loss per trade, price breaching your strike, and sudden IV expansion. The daily rule limits you to 1 or 2 trades and stops trading after hitting max loss, preserving your account. Knowing when to take profits requires as much discipline as managing losses. Greed transforms winning sellers into losers by making them wait for maximum profit instead of booking early. Book profits at 30 to 50% of max gain, exit before expiry, and consider partial booking when appropriate. Adjustments are defensive moves focused on protecting capital, not aggressive recovery attempts. Capital preservation always takes priority over trying to recover losses through additional risk. When price approaches one side, reduce risk immediately and close the losing side early. Let's walk through a complete trade to see how all these rules work together. The ideal setup combines nifty market conditions, high implied volatility, and a sideways trend. Sell out of the money call and put options, collect premium, watch price stay inside range as premium decays, then book 30 to 40% profit. Even simple systems fail when traders make these critical mistakes. Selling every day, ignoring IV levels, oversizing positions, holding till expiry, and skipping stop losses all lead to account destruction. The strategy itself is simple to understand, but maintaining the discipline to follow it consistently is hard. Let's consolidate everything into a unified code for consistent option selling success. The option seller's code: sell high IV, trade indexes only, use defined risk strategies, respect stop losses, book early, and protect capital. This isn't trading for excitement, it's trading for consistency, turning time decay into reliable income through disciplined execution. If the option selling system we covered makes sense, let's wrap up with your next steps. Show your support by hitting like and dropping a comment saying seller mode on to let us know you're ready. Money Mastery gives you the step-by-step guidance you need to unlock financial freedom and build real wealth. Subscribe to Money Mastery, your step-by-step guide to financial freedom and wealth creation. In the next video, we'll move from this foundation to scaling your system safely and managing drawdowns like the pros do. You'll learn safe scaling methods and the exact techniques professionals use to handle drawdowns with confidence.